Hello everyone, my name is Tim Lambert and I'm the Director of Construction Resources here at Practical. Today we are going to take a deeper dive into one of our construction solutions. The product I'm talking about is Sage 100 Contractor, and the deeper dive is equipment management. Equipment management is an optional module for Sage 100 Con that helps you maximize your equipment use while minimizing downtime from missed maintenance. Fully burden your jobs and see if your equipment is working for you and not the other way around, helping you get the most out of your investment. So with today's fresh solution in hand, let's dive into the software. Before we get directly into the module, I want to go over a few things that the setup, basically the back end, and I think it'll make things look a little clearer in the long run. So I'm going to start with the account setup in General Ledger. So if you've got 100 Contractor and you're looking at the options here, you can see that there's a section called Equipment Shop Expense. This section is set up primarily so that anything that hits here, you're going to have to pick up a piece of equipment. A lot like it is in job costs with the direct expenses, there are equipment cost codes and it ties everything together. There are some dedicated accounts because there's some automated posting in the back end, and so we set those things up, as well as posting job costs for equipment, repair, and revenue. While we're talking about job cost, let me just pop into job cost and show those pieces as well. So if I look at my job cost codes in the software, pull that up, I've got a section down here at the bottom called equipment cost. These are the codes that I'm going to use when I'm costing expenses against equipment. You set these up custom for your business to make that match your needs. And our end goal for this, and I'm going to show you just a quick little slide just so that it makes sense. Our end goal is to have equipment pay for itself. And so I'm going to pop this up. This is just a little example of what we're looking to do. Anytime I'm talking about revenue as we go forward through this, what I'm talking about in revenue is here. It's allocating those equipment costs up to a job. So this is treated as if it's a contra account in your shop expenses, but it's treated as if it's revenue for your equipment. So when this total expense shows zero, you know that you're billing everything out the way you need to, and everything is there versus your equipment, you working for your equipment, and everything gets allocated up to those job costs. Now getting back into the software, I'm going to go in and look at a piece of equipment. You can see when it's set up, you've got some general descriptions in short. We have some statuses here, keep up with what's going on with your equipment, and some types. You can have as many types as you want, and types can be used in the software for a lot of different things. Just to kind of walk through some things that are up here, you can actually store an image of your equipment, so you can keep up with what it looks like. You also have some options for putting in notes about the equipment and assorted attachments that go with it. On the General tab, kind of walk through this. You have your general information, your serial number, any licenses, where it was last seen, when it was purchased, how much, keep up with the mileage. There are some cost and revenue buttons down here at the bottom. I'm going to cover the cost and revenue later, but just to hop in the maintenance button for a second. You can see this is scheduled maintenance. Who is scheduled to do the maintenance and the days. These can be set up with automated cycles, so that once one maintenance is done, the next maintenance gets created, and we can set up reporting to notify the employee or anyone what's due next. On our financial tab, this is where we work on our costs. We've set up some accounts where to post expense and depreciation. That's because of some automation. You don't have to pick these things later. If we have a loan for that piece of equipment, there's a facility in here to pay the loan through the equipment module, and we'll cover that later, but this is the basics. Monthly depreciation, you can post your depreciation for your equipment, and a ledger that keeps up with exactly what the balances are for this specific piece of equipment. You're not looking at a bulk account in your GL, you're looking at this equipment. There's a cost recovery. We have some dates here. Value consumed is through depreciation, what did I lose on this equipment during the year? That's a cost. Insurance, taxes, all of these are owner costs, and they're static. Whether the equipment is in the field or not, you're still having to pay insurance on it. You're still having to store it. You're still having to keep up with financing, and there's capital costs. And so those costs are static, and you can see the total cost, and this is at a yearly basis that we're looking at here. If I take that and divide it by my estimated use, I come up with a rate. This is what it costs to use that piece of equipment, whether I take it out or not. So that becomes my idle and standby cost. And then over here, these are the variable costs: the fuel that's in the field, the oil changes, the maintenance, the tires, and all of those repair things that happen when it's out there and actually being used. Those are my operational costs. And so if I take my operational cost and my ownership cost and put it together, that's what it costs to use the equipment in the field. And so on my last tab, we're going to run all of this together. And so these are my calculated cost over here. This is what it costs to use the piece of equipment. And I can decide, what am I going to bill the job? What am I going to bill the customer? And so here I've got cost rates that'll get billed out to the job. If I'm billing the customer on like a T&M billing, then I've got some choices. I can use these billing rates that I have for my job where the cost goes over and shows cost, and then I can mark those up in T&M. Or I can actually put some flat rates out there, and that's what these are for. These are billing rates for flat rate for days, weeks, months, and all that can be done in our time and material billing, so we can keep up with it. Okay, now that we've set everything up and we got our equipment out there and we got our GL and our cost codes, what am I going to do with it? So there are basically three different ways that we can put in allocated revenue. And again, when I'm talking about revenue, I'm talking about billing the use of the equipment directly to the job, directly to the customer, so that we can keep track of that. So there are three ways it can be entered in the software. We can do it through payroll. And so let me go in here. Through our daily payroll entry, you can see over here at the end, we can keep up with operated equipment, operated rental. These are those daily, weekly, monthly rates that we had. Those fall in here. The operating equipment is where it gathers those costs. I can put that in. I can also do it in my daily field report. I've got me a shortcut here. So let me pull this up. As you can see on the equipment, I can go in, I can put my operations and how things go. And lastly, I can do that in my equipment allocation. And so just so that we can kind of see how these look, I'm going to slide this down here, shrink that up, and you can see all three at the same time. There are three different types of entries, as well as three different places things to go. And so I have an entry to where I'm going to bill this piece of equipment to the job. And so that's handled in the operating section. And so if I put operating hours up here in my daily payroll, or I put operating hours in my field report, or I put operating hours here in my allocation, it's going to take care of that. I can also bill this for time and material. And so if I'm doing the time and material, it shows up in my rental columns. So I need to either do that in payroll or do it in my allocation. It doesn't show up in my field report. And then lastly, there is equipment to equipment. So if I am using one piece of equipment to repair another piece of equipment, I can actually bill the other piece of equipment for that. That is in the repair section. And so over here I've got an equipment repair that's in here. And if I get into this and slide it back a little bit, I've got an equipment repair in here. So that's what those twos are for. So you've got a lot of different ways to get the data in, and it really is the best, what best fits your particular system on how these things work. So I'm going to exit out of this one. I'm going to exit out of this one, and we're going to spend our time in this one. So let's look at how our three different scenarios would work in the software. We'll hop over here. My accounting date for my software, I'm going to put this on 6/15/2018. My sample data is all in 2018. So on the 15th, actually I'm doing this on here. I'm going to back this date up a little bit. Let's say 2018. So I'm going to bill this to a job. I'm going to push this to an actual job. So I'm going to pick a job. I'm going to push this to Bob's house. So at Bob's house, we did some grading work, we used our CAT 916. I was there for 6 hours and sat for 2 hours while I was working on things. That's all I need to do to build the job. When I post this, it's going to build the job. Our other scenario that we had talked about, we're going to 6/14/2018 for that. This is also equipment use. So I'll copy that down. I'm going to put this to my lamb shoe job. And in this case, my lamb shoe is actually a time and material job. So I'm going to bill this as time and material. So I'm going to come out here. Again, I'm going to do some site work using the same piece of equipment. I used it for 6 hours. I stood by for 2 hours. But I'm going to bill this. So I'm going to say that I was here for 1 day. That way it gets billed that way. Our last scenario, 6/16. Again, we've got equipment use. So I'll copy that down. I'm not going to pick a job. I'm going to pick a piece of equipment to repair. And in this case, I'm going to pick my forklift. I'm doing a repair on the forklift, and so I'm going to say I had to replace a hydraulic pump, and I consider that a major replacement. And I'm going to use my loader to lift up my forklift so I can get underneath and work. That's all I have to do. It's very simple. It's very straightforward. If I'm doing this in payroll, it's the same thing, except I've got an employee tied to it. This allows you to push that use. And so if I were to save this and post it, it's going to create a journal transaction. And I've got a copy of that journal transaction right here so we can see it. This journal transaction is from that post. It lets you look where the different dollars are going to. Dollars going to revenue for one job. Dollars going, pulling out of expenses going to a second job. They're in different departments in my software, so it hits different places. I've got some repair expenses, and I have my revenue for using the equipment. Things get pulled out of the shop expense and the equipment expense section and moved out to where they belong. If I look at the other things that were created here, I can look at my job cost, and I have job cost as it pushes out. I've got different rates here because I had standby and I had operating. So I've got 2 different postings for each job that's affected. I can also look at equipment cost, and I can see here the cost that was pushed out to that piece of equipment to repair the forklift that we had. So all of that happens from the single entry. So you can see each piece and how it works together. Now that we have gone through and posted some things, I want to see how that affects my actual piece of equipment. So I'm going to go back into my equipment. I'm pull up that piece of equipment we've been looking at so far, and now I'm going to go into that revenue section that we talked about. There are, just as in job cost, you have job cost postings. Here you have 2 different sets of postings. You have cost postings that go into the 8.2 screen and revenue postings that go into the 8.7 screen. And so here we're looking at the detail from this piece of equipment in that screen and how it goes down. And you can see we've got our line item here for our repair. And so if I drill down on that particular item, I can see the record that was created. This is showing revenue. Again, that's our contra expense. It's showing revenue for our piece of equipment for 300 and a cost for our 100 and how it ties over. Here we've got those individual items, and I'm going to look at the lamb shoe just so we can see what that one looks like over here in the revenue side. And so as a revenue side, this creates that transaction. It shows the number of hours, and it pushes in at my revenue piece. And in this case, this was our standby hours. This was our standby hours. If I were to go to that transaction, it's going to take me to the journal entry where I started with. And then if I go to job cost, and I'm going to look at lamb shoe, and I'm going to see what happened over in job cost, and go to my time and material billing, you can see my time and material billing has been overridden, and this record doesn't show. That's because it's billing in an actual record for that full day. So let me see if I can find that here. Here we go. This is that full day. build them for a full day, it's going to override, and it's going to do my T&M billing. So it all ties in as one post. Simply by doing the allocation, you created all these records in the back end. If I want to hop out of here, and I'm going to work my way back in, I want to look at some cost here as well. And so if I go over here to my cost, I can see these are my cost entries that are tied with this piece of equipment. And I'm going to look at tires just so you can kind of see where things come from. So if I drill down on this particular entry, this is the cost entry. It tells me it came from an AP invoice. It could easily come from payroll as well. I've got somebody in the shop who worked on it. His hours could be pushed here. This one came from here. It tells me it's an AP invoice. It tells me it was a vendor. It gives me all the detail. If I want to drill down to the source, I can see where it originated. And it originated as an AP invoice. I'm going to shrink this up so you can see a little bit better. Bought 2 tires. Very simple. Used a purchase order. Pulled it in. If I look at my equipment cost, I can see back around to where that transaction started. It was posted and in. Because it hit that equipment GL account, it's going to make you pick a piece of equipment. Everything is tied together in a nice, neat package. If I look in my general ledger and look at my equipment loans, it has sub-accounts. Every sub-account is a piece of equipment. If I look at my accumulated depreciation, there are sub-accounts there. Every sub-account is a piece of equipment. Everything is tied up nice and neat so that you're minimizing the number of times you have to touch this. Everything processes out accordingly. So now that we've looked at the revenue side and we've looked at the cost side and we've talked a little bit about maintenance, I'm going to go in and we mentioned depreciation. So I'm going to work my way back out of all of this and I'm going to open up my piece of equipment again. Here on the financial section, there's a depreciation. So depending on how you process things, the software is designed to let you do monthly depreciation entries. Rather than waiting to the end of the year and making this big lump sum or going back and do distributions across the year, you make your depreciations monthly. Your accountant should be able to provide you with the schedule of values, and you've got that at a piece of equipment level. We've got it set up where to put those depreciations. We put our account on each one of our pieces of equipment, and we got our monthly fee. And what happens with that is when I go into depreciation, pull this up, all I have to do is post. Each month I pull it up post. You can see I'm behind a little bit. Last thing was posted here. But I post and it posts my depreciation. It posts my expenses. If I look at the general ledger transaction that comes from this, the journal entry, I've got a copy of it here. So let me just open that up so you can see what it looks like. This is the entry it posts to. I have my expenses. I have my accumulated with my sub-accounts. Everything is posted here, and if I look up at my equipment cost, I can see it automatically put in that cost. It picked the cost code that I'd set as default, the equipment, and the amount. Everything is automated quick. The other piece that comes in here, and bring my little piece of equipment, exit out of here, bring my equipment up, is the loan section. And so you can see over here, we've got loan, we have options on how to set it up, bank, loan number, interest rate, payment. If I want to make my payment every month, I just go into my payment section. I pick the ones I want to pay, pull this up, print a check. It prints a check for each one of them. It pulls the settings from the setup, pulls the amounts from the setup, it calculates the interest, it expenses the interest, and so I can look at that option here. It tells me to pick a default cost code, that way it knows where to put it. Everything is automated, everything pushes out. And so lastly, I want to talk a little bit about reports. And so if I go over here into my equipment reports, I'll scroll up so we can see it. I have an equipment list, which is a lot of options here. I can look at a straight list, a list alphabetically, a payment list that's tied to it, cost recovery information, rental information, all of that can be reported on quick and easy. And with all Sage prints, you've got the option of printing that to an Outlook email and posting it, email directly in the software. If you've got a fax machine tied through, it ties with it. I can print it to Word, Excel, screen, and actual paper. I have some cost journals. I have ledger journals that I can print. I have management reports. Just a quick example of a management report. We go here and I go in and use my piece of equipment, and notice I can either do the single or all of my type. So I've got some options here. This one is by period, and so my accounting is currently in 2018. This gives me a snapshot of how I'm doing. Number of units this month. Costs, cost per unit, how much revenue I generated by using it in the field, how much contra expense I pulled up, and I'm making a profit. I'm showing a gross profit of $11.62 every hour for that piece of equipment in the field. So I am maximizing my use for that piece of equipment. There are some maintenance reports. I'll kind of pull up here and just show those. There's maintenance reports, there's notes, there's past due services. Those reports can be printed either at a piece of equipment level, they can be printed by the employee who's assigned to it. A lot of different options you have for pulling those things through. We have some documents, and we have revenue journals that match up with the cost journal so you can keep up with things. So I think that's it for Sage 100 Contractor Equipment Management. Thank you for joining us today. If you have any questions, my contact information is here, and join us online at practicalsoftwaresolutions.com.